All right. Well, good afternoon, everybody, and welcome to the Bookmap Academy meeting. We do this every Thursday, as you guys know. So it's coaching and mentoring, and we'll review your trades in here. Oh, hold on a minute. And mentoring, and we'll review your trades in here. Okay. The goal here is to extend this opportunity here for you to learn about order flow, to get some feedback from us, for you to become a better trader. We're willing to, if you take part in the program, we want to complement you with Bookmap for free. Now that you have to earn this, and there is a path. So if you're interested in this program, just go to bookmap.com, click on the More button up here, and go to Bookmap Academy. That is here under Community. Okay, you can read about it here and go through the process. You'll first apply for the Bookmap Junior Academy. If you are accepted into the Junior Academy, it's a testing ground. The goal in here is to meet a quota of just one piece of content per day that is quality. And if it's good stuff, you will be invited to the Bookmap Academy, where you can get Bookmap for free. You can also get the MBO bundle for free if you double that quota. And you can move on through the process here, become a coach, become a streamer, and it all starts here. So you'll need to sign up, and you will need to put in your Discord name. Once you sign up, you'll be instructed to go to our Discord channel. In the Discord channel here, it is in the what is it here? The applicants room. Okay, so hold on just a minute. Right up here, yeah. You will request your spreadsheet with Dan, and Dan will give it to you. We'll capture your Discord name. So now all the communication is going to be in Discord at that point. All right, present your or copy and paste your content into a spreadsheet, and we'll review it and go through it. Now it's on rotation, so we can't get to all of you guys, but we really try, and we really appreciate your efforts here and want to create a really strong community and support each other. All right, so general disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so let's jump in here, and we've got Slowdown on the mic, and he's going to go through his content first. Hold on a minute here, and I'll bring it up. Or I'm sorry, his feedback on your guys' content. Just a minute. What did I do? This link. Okay, hold on just a second, guys. There it is. Okay. All right. Welcome, Slowdown. And first off, you guys know who he is, most likely. And he's been creating some fantastic, very clear content for the past year or so. And it's exemplary. And really happy to have him here as a coach.
Thank you, Bruce. Thanks for the kind words, and hello, everybody. To be perfectly honest, I'm, never really been one for the microphone, so please temper your expectations, and I'll do my best to navigate this review, as efficiently as possible. Any comments, notes are all purely subjective, so take anything with a grain of salt, just like you should with any information you're getting on the internet these days. And I'm going to jump right into Shark Belo. So Bruce, if you wouldn't mind enlarging the image there. And overall, Shark, I just want to say I think you had some fantastic progress. I like how you've really begun to refine your focus and primarily document the 1-2-3-R reversal pattern. I scrolled through a few of your submissions and thought the quality and your consistency is really high. So all in all, just keep up the great work. My suggestion going forward is that I've noticed you've done a really good job identifying order flow elements on the image, but I would also try to apply those order flow elements to add a little more confluence to the actual pattern you're tracking. So while you see your pattern setting up, you can ask yourself, is the order flow currently supporting the pattern? And so what I've done here is I've gone through and just made a few little order flow notes on your image to kind of go along with that theme. So first thing, first things first is the liquidity. You can see, as you've noted, it's a lot thicker on the ask. As price is moving higher on volume, the bid is not really supported. This obviously means that sellers, when they enter the book, they can quickly drive the price lower with less resistance. But if I'm being perfectly honest, where your entry signal is on the bar chart, the order flow doesn't quite support a short entry at that point. I've marked on the Bookmap chart, around where your bar chart entry would be. And at that point, it feels like, buyers are still in control. Again, there's nothing supporting the bid, so we can move quickly. But I wouldn't have the confidence to enter the short exactly at that location based on what the order flow is telling us. So if you kind of look at where I put the little B there, the white B, you can see that's kind of when sellers actually enter the book. Until that point, we don't really see a lot of them. And we're only 1.5 points off making a new high a day. So, those are two reasons why I'd be slightly more cautious. After the sellers enter, we do see a low volume, kind of push from the buyers. Like the buyers try to take it back. We don't get a lot of interest. Like I said, they are, that's right around C, Bruce. Yeah. The low volume pullback from the buyers is kind of a failed attempt to make that new high a day. After that point, I would be a lot more comfortable looking for the short, personally. So I've circled an alternate entry right there, which goes along with your reversal pattern. It's just not taking that very first break of the trend line. It's waiting till we see the sellers. Now we've seen that the buyers don't have enough to push a new high a day, and now I would be more interested in the short. And if that's the case, we'll be trying to get a scale or a partial profit by where I've outlined the letter D, which is the previous structure where buyers took off. And if you look on the profile, it is also the high volume area. So I guess my advice would be, while you're tracking this pattern, just see how the order flow matches up with it. So my alternate entry, of course, would have been less profitable than the one you've outlined on your chart. But I personally would be a little more comfortable with it just based on what we see in the order flow. And that's kind of that. I'm a big fan of obviously drawing my own schematics. So if this pattern is something you're really studying, perhaps you could consider drawing your own, small diagram and putting a few little order flow elements in there to remind you of what you're looking for, to actually engage in the trade. But otherwise, great job, great content. I like how you've got the bar chart there. I like how you have a defined setup you're looking for. And, just find a way to add in those order flow elements to give you a little bit of extra confidence.
Yeah, nice, really nice. I have a few comments as well on this. I'm in total agreement with slowdown in the sense that I understand you're looking at your 1, 2, 3. I understand you're looking at your technical analysis with the trend line here, but I'm not seeing anything tell us anything about that in the order flow here. This still looks to me like it's going higher, and they pulled away, on not too much volume in here, but it was successful enough. Brought it down to where it broke out from. We get a little bump. And then I think just like slowdown is saying, like in here, look at the volume in this area here. It's very little. So at this point here, you really have a much lower risk It's moved away from here in this higher area, and it's just like he said, it's you're not getting as much out of it, but it is the order flow is telling you more, and I think that's really really insightful from Slowdown. Do we want to turn the mic on for Shark Belo? Yeah, there you go.
Can you hear me?
Yes, there you are.
Yeah, so I initially started, I was prioritizing that pattern, but moving forward lately, I really want to prioritize the order flow and then have the pattern as confluence for the order flow, like you guys are saying.
Okay, so I mean, this is something that you've really studied quite a bit now. It's kind of 1, 2, 3
I
pattern.
Before coming to Bookmap, I was in a group that trades trend lines, channels, and wicks only. I was the only supply and demand trader in the group. So I adopted this, which the mentor there teaches, and kind of worked it into my supply and demand levels. So I've been using it for a long time and have had really good success with it. All the way, daily charts, trading option leaps, and then all the way down to really, really low time frames.
Wow, that's fantastic.
Yeah, another thing, Shark, that I like to do is I look for the pattern that I've like kind of predetermined to set up, and that's when I really start focusing on the order flow, rather than focus on the order flow all day, all over the place. You can use that pattern to kind of let you know it's time to pay attention, like hard focus versus soft focus mentality. And so when you see that pattern setting up, if it's something you're successful trading, just look for that order flow to kind of confirm what you're thinking.
Perfect. I think the order flow, the pattern, and my supply and demand zones all work really well together.
Yeah,
All right,
that's
sounds good.
that's really great to hear. I mean, like the I think Slowdown. Your comment there is uh, really noteworthy because you know we just burn out looking at order flow all day long, or looking at charts, staring at these charts all day long, and that's not helpful. I mean, instead, here, like, here's your higher time frame pattern. This is what you're looking at on your higher time frame. Now, start to look at the order flow in this back and forth in here. Where is it that you're looking for? Here's the pull away. But now you can start to look at, okay, was there high liquidity here? Yeah, there was. And was there a lot of volume here pulling it away? Well, if there's not, I think it's perhaps it just tests down here and comes right back up and then breaks out. We don't know, but like focusing in and on exactly what you're looking for, because you've been studying this for a long time. Then look at the order flow when you got it. So I think will allow you or allow any of us to stay in the game longer, basically, with less
I think
energy.
that's really on point advice. The cool thing about this 1, 2, 3 trader VIX pattern is if the two fails, then the 2B rule kicks in and it gives you another opportunity for a reversal that actually has a much higher risk to reward than the 1, 2, 3 itself.
Okay. So you mean so if it fails down here, you're looking for the move back up through
You will know if it fails at the two,
here?
which is to stop making higher highs. So let's say it does make a higher high, that's when the 2B rule kicks in, and you can grab another entry using the poke bar, the where the two and the 1, 2, 3 failed. I'm gonna draw up a diagram like Slow recommended, and I'll get that shared in my next round of posts.
Yeah, awesome. Okay. Let's see. Anything else you want to add in here?
Uh, thanks for the insight. I really appreciate it.
Yeah, no problem. Just looking for, I mean, like, it's just a good example of looking for something more likely. And I think like some of these points in here, like it is just more likely, to hit this. If it's moving away from all of this up here, and we've got lower volume, you got less buyers in here. You start to see sellers ramp up here. This looks just more likely to unfold. Um,
Yeah, I see that. I see that now.
yeah. Okay. Well, let's move on to the next trader here. Uh, let's
Thanks a lot,
see.
guys.
Yeah, thank you. No, great stuff. On to JYF.
Yeah, JYF trader. So overall, I'd say you've done a nice job of capturing, the larger picture of the day's price action. You've got kind of 6 screenshots in one there. I would say though, yeah, this is just my opinion. For the purpose of the Bookmap Academy, my suggestion would be consider submitting less total screenshots and identify specific order flow behaviors on maybe a single screenshot instead. So I've noticed you're noting things like VWAP rejection, VPOC fail. So one approach is you could consider highlighting the order flow elements around these events and then see if you can build a little more of a defined criteria so that when these events occur, you can kind of have a checklist or make them more actionable in real time. So it doesn't have to be, it doesn't have to be the VWAP rejection or the VPOC fail. Anything that you're noting that you find interest in, I would say focus in a little more on and try to find, what order flow elements are occurring around those events, how consistently are they happening, and you leverage that, into your trade plan. So what I've done is I've made a few kind of broader order flow annotations on the main image there. An example of what, some people might consider relevant. You might not find these important at all, and that's okay, but it's just an example of me quickly pointing out what I see, as areas of interest on this image. So if we start kind of at number 1 there, Bruce, we'll see, we open with a push down and then a big buy impulse up into number 1. And that's kind of pick and stops at the initial balance high based on your cloud notes. And we see, a lot of liquidity absorbing those buyers. So we drive higher, we drive into a higher time frame level, we see the absorption. The next interesting thing to me on this chart is number 2. And I'm not exactly sure what happened, but it looks like some type of data release or Fed speaker reaction based on the liquidity being pulled and the massive impulse of volume. So that is an event that I would keep an eye on. If you look to the left and the right of where the left and the right of their liquidity actually gets added back to the exact same level before and after price action. So where we impulse on that news release ends up, kind of becoming a relevant part of the picture here. Right after that, we retrace that entire news pulse right back up, which is kind of number 3 on the. So not only do we fully retrace the impulse, but the liquidity is also added back to the exact same level, and we don't have enough buyers to take it through. That's another thing I'd consider interesting in terms of the bigger picture here. What else do we got? I guess, sellers come into the book, we start moving lower, and as we approach VWAP, the VWAP rejection you noted, we see, that heavy liquidity added back to the ask. Right there, Bruce. And, it also gets pulled before we transact. So we see buyers at VWAP, but we don't see heavy liquidity absorbing those buyers. It's possible there's an iceberg. It's possible people are just shorting at VWAP. We'll never know. But after that point, we move down to number 5, which has kind of been the, if you look at the screenshot, it's the longest liquidity. Like the liquidity's been in the book longer at number 5 than anywhere else that we can see. A lot of people will use these as magnets, targets. Just take that for what it's worth. But price does sometimes tend to head towards, high levels of resting liquidity. As we pop number 5, it's also taking the stops from the low a day, which we made right out of open. So you do get a little stop run there. 6 is important because the liquidity is added directly back to the level and buyers show up. So like right there between 5 and 6 is a really interesting point in terms of order flow. We get close to that high liquidity, we don't quite transact it, and then it gets added right back to the bid and buyers step in. So right there could be a potential caution if you were short. You might be looking for an exit, or you might not be looking to get short anymore at that point in time. And then the last crucial thing for me is once we regain number 7. So number 7 is kind of the high volume area of the chart. And if you look to the left, it's kind of also, we've had a few swings off there. So as the buyers drive us back up above that level, I would now be kind of not looking for a short until the order flow changes and says anything different. And again, that's just an example of the, a few things that I'd be looking at when looking at the chart. That doesn't mean they're things that you have to be looking at or anybody else has to be looking at. But I guess the goal of this was just to say, perhaps narrow your focus a little bit more in terms of your submissions onto what behaviors actually interest you and how you can use those to, create, a more cohesive trade plan.
Yeah, great. Thank you. Thank you, Slowdown. We've got JYF in here, so we can pass the mic over. I think he's got his hand up. Can we do? Let's see. Okay. All right. So you've been invited, but it looks like you don't have mic access or don't have the capability right now. All right, that's fine. So a big part of the room is, or this webinar is for you. It's about you guys, and it's all about you guys. So try to get your mic open, and we'll we'd like to call on you. We'd like to hear what you guys think. You may have questions. This is the time, and we can all learn from each other as we go through here. Maybe there's something that we missed. Maybe there's something more we can comment on. Maybe others in the discussion have something else to comment on. All right. So anyway, yeah, I mean, and then for any commentary on my side, I mean, it's kind of, there's a lot going on here. And very high levels of liquidity that are staying. I mean, it's really kind of all over the place. Kind of a hard read, to be honest, in my opinion. So yeah, it does look like maybe something's going on around here at this time, which is around 10 or 11 o'clock. It looks like, yeah. I don't know if this is East Coast time. I imagine so. Okay. So let's move on to the next one. Trout.
Okay. Trout comes with a little caveat. I did this entire review before realizing you were on MES chart. I kind of just assumed it was the ES chart. And the only reason that's important is because I make a few notes about being in the range. Now, if we were on the ES contract, the volume shown in the CVP would be far more relevant than it might be on the MES. So this might actually, in hindsight, be, a smaller range rather than like an all-day kind of thing. But nonetheless, I think the concepts still apply. So I'm just going to go ahead with how it was. Again, this is also a short time frame, but all the concepts I'm going to talk about can also be extrapolated into whatever time frame you're really interested in. I guess I'll start with bonus points for your color scheme on your bar chart. I love it. It's really nice. I'm always appreciative of aesthetics, so it's nice to see somebody else doing something a little different. But to get right into it, I know that this wasn't a range-bound trade for you. Based on the notes, you're looking, for a high-a-day breakout. But for the purposes of this webinar, I'm going to touch on range, theoretical probabilities, and exit strategies. Again, it can all be applied to different time frames. So if we start right around number 1, there, Bruce, you can see the defined range that I'm talking about. Again, I thought this was the ES contract, and on the ES, that would be a very thick and defined range, just based on size of contracts. So my theory is that price is consolidating until it's not. I learned that the hard way. When I first got into trading, I was basically trading breakout strategies all over the place. And it was a long and painful lesson that, let's just say price consolidates until it doesn't. So there's the defined range you're trading in, which you've also got a nice rectangle on your screenshot. So now that that's set up, you've noted number 2 that your entry is a little early. And I would agree. So based on just what we can see in this screenshot, again, we don't know what happened before, we don't know what happened to the left. So this could be a reaccumulation after like a large impulse up, but based on just what we see here, I'm going to assume it's a range. And so if you're entering in the middle of a range, it's going to really skew the risk versus reward. And again, I know it's not your intention to be taking a range trade here, but when you're entering in a defined range, you are beginning your trade within that range until it breaks, whether we like it or not. For this entry to work, we do need to break and make a new high a day, which we ultimately do. So it's a successful trade, and that's great. But when it does come time to entering a range, I found a lot more success trying to get in closer to the bottom of that range. And just for like a really simple way that I try to digest the market. So when I'm sitting back, I think to myself, like, the market's going to do one of 3 things. It's either going to go up, it's going to go down, or it's going to go sideways. That's it. It might do all 3. It depends what time frame you're looking at. It might be, ultimately it's going to go up, down, or sideways. So when you're entering in the middle of that range, you only really allow yourself to profit if it goes up. If we break to the range to the upside and get continuation, you have a successful trade. However, if you enter near the bottom of the range with plans to take a scale or profit near the top of that range, you really increase your odds of success. You're now able to turn a profit if, number 1, the market goes up, or number 3, the market goes sideways. Because even if it's going sideways, as long as you get into the bottom and you can take a scale at the top, you're safe and you're profitable depending on how you manage it. You only really lose if it goes down. So in terms of like ranging and entry, I do think it's like really important. It's kind of counterintuitive to want to enter at the opposite end of a range, but it kind of works. Over a larger sample size, being able to get a scale before the range actually breaks can be really profitable. Now, in this, the range will eventually break, but until it does, we don't know which way it's going to break. So something to consider. Again, this could be a reaccumulation after a big trend up. We don't know, so I'm really just kind of going off what I see in the actual screenshot itself. Okay, what do we got there? Number 3. Ooh, yeah, number 3. So this is about exit strategies. Now, everybody has a different way to kind of play this. A lot of conventional teaching is to front run the liquidity. Some people say 2 ticks, some people say 3 ticks. Everybody's got a little bit of a different story. And the only way to find out what's best for you is to just start recording your results. What happened if I took it after we passed through liquidity? What happened if I took it before we passed through liquidity? Over a larger sample size is where you're going to really find out what makes the most strategic sense. One thing you'll note is that your profit target is sitting just on the other side of the liquidity. And that's kind of where the volume actually comes in, if you look at the bottom of the screenshot there. So the disadvantage here is that we don't actually see the big surge of volume until we break through the liquidity. So your profit, we broke through the liquidity, your profit gets hit, but then that huge buy impulse comes in And that's really the signal that we might have legs to get up to the next level of liquidity. So in my mind, like we often do pop liquidity and come right back. So like the take profit could be valid on either side, but it's more about what's going to happen, out in 100 occasions, what's your most likely outcome. So at this point, we've made it all the way through the liquidity, we've hit your target, and then the buyers really step in and blast us into that next level. So you kind of have, with your exit being there, you kind of have to have enough buyers to get through all the liquidity and transact whatever level your bids or your target's sitting on. But then you don't get to enjoy the reward of all of those buyers stepping in and really lifting us up higher. At number 4, you've noted the better exit was here. And I can't tell from how the screenshot zoomed, but there's a chance number 4 is exactly what I was talking about, not having enough buyers to actually fully transact that liquidity. So if your profit target was, 2 ticks on the other side of that liquidity, you might not have got filled. We see a little exhaustion above the buy volume, but we don't really know. So I would say just start studying a little bit of exit strategy and determine for you whether it makes more sense to front run liquidity or to be taking your top profit target through it. Ultimately, I think it's a great screenshot though. And I like your notes make a lot of sense. You've noted that even though your trade worked, your entry wasn't necessarily ideal. And you also note that my suggestions wouldn't necessarily have made this individual trade more profitable. It's more about managing expectations over the long run. And, we all want to do this for a while. One trade is one trade. And, that's kind of that. But, great quality content. One other suggestion is I noticed on a few of your screenshots, you kind of mark, in this one you have high a day, MLK day, that kind of thing. I'm really into that stuff too. High days, lows of days, overnight highs and lows. And so I'm sure but you can always add a notes column to your bookmap and put those labels right in the notes. So you don't have to kind of be glancing back and forth when we get to important locations. But of course, that takes up screen space, so to each their own.
Right, excellent. Really, really good points in there. A lot of stuff. Trout, any comments on this? I think you're on mute. You've only had Bookmap for a couple months, studying the ES 6 months. It's great stuff. I mean, and you're looking at the right things, and you just got some unbelievable feedback.
Yeah, all in all, I'd say, Trout, you're doing a fantastic job. Measure your profit targets and your outcomes and that kind of thing, and see what you think. But ultimately, great job, great screenshot, nice paint job.
Yeah. I have a few comments on here. It looks like his computer won't let him unmute somehow, so that's fine. Well, first off, look at the effort you put in. This is it's great, and you're making distinctions in here, like Slowdown had said, with the colors, and there's an honesty to this. And that's great, because then you can receive some really good feedback. I really like it, the kind of vulnerability to some of these, a lot of you guys, and what's being recorded in here. This is a big part of the Academy, and then to get the feedback on it. I mean, there's all sorts of things in here, like entering in here in the middle, just like Slowdown is saying. First off, well, what do you have over here that tells you that this is a good entry? And then the risk to reward. I mean, you're in the middle of all this. Now hindsight's easy, but it's already here, in the past. Is there anything in here telling us that this is going to happen at that point? We do have liquidity here. We do have them pulling here, and it did break through here. There are some points there, and I can also see some volume coming in. That's valid, valid enough. And if your stop is below here, or down in here, maybe you have to wait it out. Here, though, there's something a lot. Now I know it's hindsight, but it kind of is and kind of isn't. One thing that we don't have up in here is strong volume, but we do get it here. But this is what's really nice about this little pattern in here. Something that I think we see time and again is, and it should have done it here, but it didn't. It kind of goes like that. And here it finally did it. You've got the and slowdown's move is to kind of grab these little bottoms here, and then he's looking for top of the range, take some off, and then here's the pattern though. Like it's right here with your point of control. So it traded up, it traded through it, bounced off of it, and now we're getting more volume in here. So this does look like it wants to go at that point. Maybe we have some previous areas up in here too. Like it auctioned a lot up in there with this volume in here. That might help us kind of understand this move here. So just a few comments, but doesn't match some of the commentary there from Slowdown. Little more articulate from his side. Some really nice stuff here. Anyway.
It's just a bunch of words anyways. I think it's always nice to be able to look at it from multiple perspectives, because there's a million ways to make or lose money in the market, and we can look at the exact same screenshot and see different things, and getting that feedback from different people, different coaches, and especially Bruce, you can really start putting the pieces together, and just take the advice that makes the most sense to you and resonates with you is one thing I always say to people. It's like I read a book all about trading, and the only thing I really took away from it is that you don't really need to know what anyone else is doing at any point in time to make a living or to make a profit. You just got to really kind of focus in on what makes sense to you, what clicks with your brain, and then keep a focus and pursue that. Don't worry about what anyone else is doing. Don't worry about what I'm doing. Just think what makes the most sense to me, and then really start focusing on that.
Yeah, that's a really good point, Slowdown, because if you continue on, I mean, don't let we're just trying to help. We're not trying to confuse. If it's confusing, then don't listen, or ask questions and try to clarify. But if it's not clear, then don't listen. I mean, if you've got something that's working, and it does make sense from any commentary here, then that's good. If it's not, run.
Yeah.
And this is hard enough as it is. Yeah.
The last thing I'll say is I just see Trout's comment here, how some days are harder to see the flow and actually execute. And I'll say one of the biggest epiphanies I had is, I'd been studying quite a bit, and then I started going to Bruce's webinars, every Monday, Wednesday, Friday. And one of the first things that really clicked was that sometimes it's not clear. You can have an order flow expert looking at it, and you can kind of, some days, the read is bang on, and we're just flying through it, and it all seems so easy. And other days, it's just kind of, up in the air. So one of the most important things I took away from my early sessions with Bruce was sometimes it's not clear. And when it's not clear, you don't have to participate. Wait till it is clear. Of course, it's easier to say in hindsight. I fall victim to that myself. But is it clear? Yes. Okay. Now look to engage. Is it not clear? Then maybe sit back and wait for it to get clear. Get a cup of coffee, take a stretch, do some breathing, do whatever you want. But, just the fact that, you're not alone in thinking that sometimes it's not clear.
Yeah, it's a good point. And I would also just I know what you're looking at in here. Um, and I may have seen exactly what you're seeing in here. Because I can understand there's high liquidity underneath here, bidding up, right? And then you see that this selling failed to drive it lower, and you're seeing a lot of buying coming in. That's pretty good stuff. It broke here, and this liquidity traded. That's pretty good stuff. Like maybe we should get the bounce like this at that point. We didn't. It did another couple rotations, and then it did it. I may have based on that in the hard right edge, like maybe I would have gotten stopped out in this area here, or maybe I would have had it here or down here. I not really sure. But I would definitely be getting in again though. You have the same thing. You have the high liquidity. You don't. I just would like to see more volume in there, but they do make up for it here, and it does look like it wants to go. It's ready to go at that point, and move away from your profile. And that's where it's telling you, I think. And it's already tried it once. It's doing it again. You're going to find enough to probably break it. Okay, that's my 2 cents. Okay, so let's see. Do you have any more? Slow down.
No, I think I've taken more than enough time here.
Okay.
That's it.
Okay, excellent. So let's see. Jack is not in here today. And he did a really nice job here. I don't know if we've already been through 45 minutes here. Anyway, like I'll just say this, Vinny V, Jack has some. I'll put this into the chat for you. In fact, let's see if it. Let me know if you guys have access to this. Okay, hold on. Okay, it looks like Dan already beat me to it. Yeah. Okay, so Dan has already put it in there. Vinny V, Jack has some really nice feedback for you here. Daniel as well, and then X Trigger, Caesar. You've been doing some great work, and I it's great to see you in here, a stock trader as well, and going through your stuff. So you've got some really nice feedback in here, guys. It's only, there's 3 images in here. We'd go probably another 45 minutes here. I'm going to jump in, I think, and then go through what I've put together for you guys, and then we'll wrap it up after that. So I've got I don't know, 3 or 4 images in here. AJ, JayZ, Alan, and Slowdown. Coaching the coaches. Anyway, let's go through AJ. AJ is new. We can open the mic for AJ as well. I think he's on the call. AJ's been trading quite a while, it appears to me. So he's got a lot of experience, and there's not a whole lot to. It's more like I kind of want to open the mic and have a discussion with AJ on this. It's really lovely stuff. There's a lot to talk about in here, actually, and I think all of this can be helpful in here. So let's, if AJ, if you're in here, let's open the mic, and you can run through this, because I have a kind of a lot of like just points of discussion for you.
Can you hear me?
Yeah.
Can you hear me? Okay.
Yeah.
Great. Let me just take a quick peek at my notes here. This was from the one. Are you showing the 1 to 24?
Yeah.
Short. Yeah. So what I was seeing here was basically like weakness in the buy side auction immediately after the open. The whole thing is that like I'll map out what the overnight ranges are, and I pay a lot of attention to that IB, that first sort of 30 minutes into the open, and I think that was the play that I was doing here that morning. And presence of buyer exhaustion and exhaustion print ratio. So you can see like basically up there, it's got a ratio of 542. So, what it's saying, for those that don't do footprint, if you look at the very top of that, you can see it says 1. And then right under it, it says 542. If you look to the left in the bar prior, at that same price level, there's 1,300 or some odd contracts traded, almost 178 traded in the bar exactly next to it on the left. So that's a very quick internal reference point that, wait a minute, what's going on? All of a sudden at that price level, there's only one buyer willing to buy. So to me, that was a sign of weakness in the auction. And then following that, you got an exhaustion print, which confirmed again right there that there's only 16 buyers now showing up. And now you're starting to get what are known as stacked sell side imbalances, where you see those red numbers starting to pop up. So basically, I just entered a tiered short once I saw that. That's enough confirmation for me to at least take my initial entry. And I know you guys see that I do these time stops. To me, that's just my internal kind of way of saying, okay, you're entering a risk position. And let's say that my initial entry is with one ES contract, and I tier very quickly. Once I'm proven, or the price or the auction is proving that, okay, I'm right, I'll go ahead and add another 5 and 5 ES contracts very quickly. So my usual size is about 11 ES contracts. And that's what I did. It is at that break of structure, essentially, where I write BOS. And what I mean by that is previous candle low is now being broken with decisiveness. And so to me, that says that there's a high chance of continuation of the candle that I've entered in, as well as possible subsequent candles. Exactly, right? Exactly. When I saw that we are now attacking that previous candle low at that level, that's time for me to just go ahead and go in. I usually try to keep my stops structural. So instead of, I used to keep like, standard 5-point stops or 8-point stops, back when I was trading MES, and it just depends on the amount of volatility. I mean, if VIX is 25-30, size down, widen your stops. But if VIX is doing what VIX is doing now, I tend to stick with structural stops. So if I'm wrong very quickly, and that's fine. I accept it and move on and look for something else. So I kept my stop right above, what did I say here, at IV high. So just a tick or two above the IV high. And within 6 minutes, I had my time stop in my mind. Yep, the trade is moving my way. And then I looked for signs of continuation. And my signs of continuation on footprint are going to be more exhaustion prints. I want to see more and more buy side weakness, which is what we were seeing. Bookmap, I use this all in conjunction with Bookmap. I was targeting, like what Slowdown had said before, I tend to look at where's everybody kind of resting and hanging out with their liquidity. Because to me, those are the higher time frame kind of targets. And so I think last time, I think Bruce and I were chatting, I mentioned that I tend to hold trades, and that's one thing I'm working on is learning to take profits faster, because I've been burned on the flip side also. So I am now much more of a believer in partial exits than I was, let's say a year or two ago. But I'm targeting all of that thick band of liquidity down at 47.73 on Bookmap. That's the confidence that I have to know that I can continue to reasonably hold this trade. Now you can see I took some partial liquidity off when we broke down past that internal range liquidity, where the longs had initially tried to make their breach, right? On the very left side of the screen, that's my reference point where the longs, yep, all of those longs that are stuck right there, exactly. Yep, they're all stuck right there. We know that we're going to go down and attack them, take their stops, so there should be some more acceleration, which exactly there was more acceleration because the sell stops triggered. And then I went off and basically started taking partial exits down as we're starting to touch that higher time frame liquidity. You guys will probably notice I tend to write these 1, 2, 3s. That's just my own personal observation. I don't know if that's anyone's published it or talked about it, and maybe they have, but this is just something that I've noticed. Try to give 3 touches into something if it's going to want to break deeper or go farther up. And when I see 3 touches and it doesn't want to break it, that's signal enough for me to be like, okay, good enough. That's what the trade had to offer me, and now it's time to leave. So That trade was pretty quick. It was like 26 minutes, and just a lot of good confluences between the real-time auction within the footprint chart, which you're seeing real time exactly where the transactions are, and the superb confirmation of Bookmap telling you in real time exactly where everyone is positioned. And at that point, it's just I just drew my trend line and wait and let the trade do the work for you. So anyway, so that's that one.
It's fantastic. Thank you very much. Way to walk through that whole trade. There's a lot to kind of continue on in the discussion. I mean, first off, one of the things that's really nice about footprint is the looking at exhaustion when it might come back up and retest, but
Of course,
you get that one up here, and you know that and you see sellers driving it away from that area.
Especially in ES, when you see a 1 or a 5, my settings are set to about 20 for an exhaustion. That's just my personal settings, which I think is reasonable in a market that that this product trades 700, 800, 1,000, 2,000 contracts at a single price level. It's like you literally read into that as the market is telling you what it's doing, that hey, I only traded one contract on ES or 16 contracts at ES at 47.89 to 47.89.50. Well, I mean, my ears kind of perk up,
Yeah, yeah. I mean, like what I want to do is first off kind of take this understanding of exhaustion, which you footprint guys and understand. We traded up here. We see a lot of buy volume. They're still transacting up here, but failed to bring it higher. Okay. Well, we know there's high liquidity up in here. We got Bookmap here. We got high liquidity here. We know that, and we also get another retest. Can't make a higher high, and we have 0 or 1 trading up here. That's they can't get much better exhaustion.
Yeah, that's dramatic. I mean, that's the auction telling you something like to your face if you're actively searching and looking for these clues, right? I mean, that's literally the ES auction declaring itself that, okay, I'm tired now here. And if I'm tired here, well, chances are, this is the ultimate mean reverting market. We're going to do some damage to the other side now.
Yeah, exactly. And this is what it looks like over here in Bookmap, right? So here's here's your exhaustion here. I'm sorry, let me redraw that because this is as far in as I can zoom, but it's right here. Right, there's actually a couple of them. But,
precisely, precisely, exactly. And the other thing, and this was sort of the bias that Bookmap gave me while I'm entering this trade. When I enter trades, I'm looking above and below me on Bookmap quite a bit, actually, even before I enter and while I'm entering to see, is something appearing or disappearing? Because the appearance and disappearance of liquidity to me plays at least to me, the way I interpret it, it has a very sort of precise interplay as to where you may want to or not want to enter or get out faster than you thought you would. And when I was looking at this short, I'm like, well, there's not a lot of stuff above us that price wants to get attracted to. And now we have 2 very serious exhaustion prints within a critical time period, which is the IB. Let's go ahead and hit this hard. So.
Yeah. It's beautiful, crystal clear, and beautiful stuff, making transition from your footprint. And one of the things in here, I mean, like I used to look at footprint as well.
Sure. Yeah.
Just the aggregation though in here. This is what happened here.
Yeah.
Exactly. This is the structure that it made here.
Exactly. And that's like we were talking about just a few slides ago on that consolidation. This could still be within a consolidation breakout kind of trade that one of the other fellow traders was showing, that you guys were showing earlier.
Yeah.
And in a sense that it still fits into that. The other thing to notice is that purple box, Bruce. If you see that purple box of the breakdown candle, the short entry, look at that.
This one here.
Yeah, right there. Yep, the purple box. What that does and that purple goes all the way to the right, the way that I have it set, because that keeps my eyes very focused. Because what that is telling me is that the entire value area, the whole value area has now shifted down. It's engulfed. So to me, that is a engulfing value area. So that value area, that decisiveness of the candle shows that the value area before it got entirely engulfed. So in a sense, on a kind of microstructural level, that's your bearish engulfing, right? You know,
Yeah. Yeah. Yeah.
that's your
Beautiful.
bearish engulfing. And you know, it to me, it doesn't get more correlative than this, which is, well, now just look below. There's your target. That's where price wants to transact. All of that orange that's very clearly visualized in Bookmap, it wants to transact between literally 74.50 to 72. And if you manage your risk, and you know you're aggressive and patient at the same time, you know, like I kind of did here, where I took partial and then another partial and then still was a little patient. And as soon as I saw my trend line break, I'm like, that's enough. That's 3 touches. It's not going to do it. Get out. End of story.
Yeah. Yeah. Is great. Wonderful stuff. You also have a trend line in here. It's breaking that after trading down here, after
Yeah.
not being able to get through it. No interest in again on the third attempt. Buyers starting to come in. This is now telling you something too.
Yeah, and that CVD touch, you know, as I see CVD at the zero line, that's where I've noticed, at least for me, that's where wild things of squeezes start to happen, is now testing in and around that zero bound of the CVD. Those are places that if you're entering and things are working your way, that's a great confirmation, right? If you're wanting to continue something in your heart that you're like, man, let this break down to, you know, 4,500, well, it's not going to happen. It's telling you, doesn't want to do that.
Yeah, yeah, yeah. Really, really, really nice stuff. Uh, let's see. I think you kind of answered all of my questions in here, or kind of discussion points. Yeah, just one question on here was about
Yeah.
uh, do you ever consider not only exiting but reversing?
So and that's a great question. And that's something that I've been very slowly working on. And I hope to work on this year, Bruce, because I've tried stuff like that before and I've gotten burned. A lot of it is, as you know, you've been doing this a long time. You know, I used to play a lot of tennis, and it's like literally saying, okay, you're going to play this first few shots with your right hand. I'm a right-handed tennis player. Now immediately start playing with the left hand. So that ability to quickly switch, I am now getting to, and I recently submitted one set of trades from CPI the other day where I actually did that. So to me, that was like kind of a good progress moment where intraday I was able to take short for about 2.5 hours, and then saw enough signals there on Footprint and Bookmap, and then for another 2 hours I went long. So
Oh,
it was a good day,
uh,
almost full intraday mean reversion. But here I did not, and I also kind of have a bit of a, you know, general profit target kind of area in mind, and you know, just with experience, it's kind of taught me, once I've kind of reached my level of satisfaction with my profit for the day, I tend not to mess with it more, because I do have a tendency then to give back those gains. So that's just the fact of it. So
yeah, yeah. And it's like a 13-point winner,
yeah,
basically. So yeah,
yeah.
can't.
13 points on, you know, basically 11 contracts. It's a pretty good day, you know,
Yeah,
so stop.
yeah. Not bad, not bad. um, wow. Thank you, AJ. Really good stuff. Slow
Thank you.
down. Do you have any comments on this?
Okay. Yeah, no, I don't really have any constructive feedback at all, other than I thought AJ did a fantastic walkthrough. The content we reviewed of his last week was exceptional as well. And I mean, I just think it's invaluable, really, having that type of walkthrough from AJ on the spot. So thanks for doing it.
Say that. Yeah,
And
no,
yeah,
thank
just
you. Thank you so much for, you know, all your coaching and feedback, and same to Bruce. You know, my goal is just to continue to progress, and you know, God knows I make enough kind of dumb entries also. So I'm not at all immune to that. That's for sure. I'm just trying to really define where I want to get involved, and just the way that I trade. If I get involved with with what, for me at least, for my account, is very decent size, and I hope to continue to do that as the year progresses. Just get crisper and more precise with execution. So thank you
Yeah.
guys.
Oh,
Isn't that what trading's all about? Hey, just refine, reduce,
Yeah,
refine,
yeah,
refine, 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 execute.
yeah, exactly. Yeah, exactly. There's no perfection to trading. I mean, that's the beauty of it, right? There's no perfect person or perfect trader. It's just, are you able to come up with your internal rules and set of rules and pattern recognition where the fear starts to go away, and you simply see what you see, and then you execute with proper risk management and emotional management. So
yeah. I no comment. That was awesome.
thanks, guys.
All right. Yeah. Thank you, AJ. Looking forward
Yeah,
to
for sure.
doing a lot more with you.
Oh yeah, for sure. 100%. Thanks, guys.
Okay. Um, all right. I'm going to move on to JayZ. I don't know if you're in here. We can turn the mic on for you. This was actually there's kind of a thread going through here that I just kind of wanted to highlight on here. This is something that we gave you feedback on this exact image before. And also this was similar to a trade that Slowdown went over with Shark Belo, I think. And then also Shark Belo, I recall either one or two other pieces of content we went through and gave you feedback on. And yeah, I wanted to comment on this. Oh, it was on Trout, actually, not Shark Belo today. And that is trading in the range. And this is, you've got your POC line up here. And you're making a trade decision within the POC, like right at POC. And now this worked out for you, and you had some nice trade management in here to take some off down at the bottom here, and then not have it go against you here, and basically take a scratch back up here on the rest of it. Yeah, nice. There's not much in here telling you, though, that this really wants to move away. You have some selling down here. That's not bad. But they're still auctioning. They're still buying back up into these areas here. And a lot of times, like, this is a magnet here. I mean, this is the most traded level. So you're going to get, like, I had a bank trader describe these kinds of zones. It was more off of trend lines, way he was describing it, but he was calling it the barroom brawl area. This is where there's a lot of traders trading and back and forth. It's not there. It's just less likely we're going to get some sort of move away from those areas until we see something more definitive, just like what Slowdown was talking about with Trout. If we're in ranges like this, I think probably one of the better ones is just trade it back into the range, and see if it can get on the other side of the range. Now this one, it worked out. It was below the point of control, and there's something to be said about that. And there's volume accepting below the point of control, and also you noted in here with your sweeps indicator. So you were looking for that move, and it did unfold. It's just harder. It's just harder trading, in my opinion. And that was my feedback on this kind of earlier. We can take a look further. There's themes in here. You're still kind of looking at these same areas. So here was your entry here, long. Okay, so I can understand you're looking for the move back here and maybe take some off. Your take profit was up here. You decided, like, whoa, it's starting to move against me, I'm out, and so you flipped. And is there really enough in here? In my mind, there wasn't enough in here for this to work out. And then you basically have to sit through this whole thing. And it can be really stressful. And this is kind of a bigger picture approach, or a point I'm trying to make, is that why put yourself in the stress? Why trade in an area where you're not, I'm not getting clarity, and I know there's a lot of trading activity already. It worked out, and it worked out pretty nicely for you. I like the way you move your stop down, or your take profit, and take it actually take it through that liquidity. I like the way you're managing your trade. But that was kind of my comment on that. And it's not just on this image. It was on Trout's. It was on Shark Belo's as well. Anyway, I think the mic's on for you. So why don't you take it away, JayZ?
Hey, yeah, thanks. Thanks for having me up. Yeah, I think the first one, yeah, that was a while back. I don't remember it too well.
It was in December.
But yeah, I'm trying to mark it better so I know the dates and stuff. But yeah, this one was only a few weeks ago. Yeah, I just saw that big gap. So I was like, I don't know, it just seemed weird to me. So I was just decided to take it short. But yeah, definitely kind of not a great location. But yeah, it had that kind of move back up, and then there's that big gap between like 53. So thought that a stop above there was a good try. So, but yeah, I think it might be better. But that it ended up working out. But yeah, definitely could look for a better entry, like right at the edge of the purple box. That would have been the best, probably.
Well, or maybe just I mean, I don't have too much. I mean, you do have your bigger picture over here, but just it is up here. So I believe it's up here, right? Yeah.
Right. Yeah. That's what I try to do, to look at the historical.
Yeah.
To match my lower time frame.
Yeah. I don't know. I mean, like, what the clearest thing that I actually see is this here. The move into and then through this liquidity. It's almost like I would kind of be looking to enter maybe even down here almost. I know that it's been kind of hacking around, or it's been slowly kind of dripping down. Now it's ready to move. And I don't know if it continued on or not. I don't know. I guess this.
Yeah, I don't have anything after that. Yeah.
Okay. Okay.
Just posted it.
So anyway, like and this kind of fits back into also the range bound and then moving. And it's not criticism on here on your image. It's more bigger picture of, like, in the ranges, it can be, especially like the most traded areas, can be very difficult to kind of understand what's going on in those areas. We had a couple of good examples. That last example from AJ of exhaustion. This is the kind of stuff where you can gain an edge. Start to understand exhaustion or absorption in specific areas, and retests of areas. And if you're not getting the buyers to continue to lift it, and the sellers are absorbing, and then they throw more on the offer at a lower area, these things are how you can build an edge and trade those outside areas of the range, or the opposite if you're looking for a breakout. We covered that one as well. But those things are telling you, or more telling, and they might be easier instead of entering in here and then having to sit and wait, for a long time for this to finally start moving. And then I don't know. Anyway, that was my something I saw in here I wanted to cover, and go over this with Shark Belo and Trout and others that are maybe trading in the range. So I don't know if you have any other comments on that, JayZ.
Yeah, that makes sense. Yeah, I think and you're talking kind of about how the sellers and buyers kind of want to interact. So yeah, I suppose just kind of looking around and looking more into that would be good. So thanks.
Okay, great. Slow down anytime you want to jump in, and you have any comments, just jump in. Otherwise, I'm going to move on to Alan. Alan, all right. So Alan, all of these charts, it looks like the same chart, copy and pasting over again. That's a really good sign. You're onto something. You're looking for something very specific, and you're trading the NQ, and this is working really well. You found the right kind of instrument with your trading method. So I know you like your mean reversions, and you're looking for a kind of a reversal off of some sharp selling here. So you got the move down. Here's your move away from an area, back, and you kind of covered it up in here, but I imagine there's probably quite a bit of selling in here, and that's where you're saying this is the trap, right? This little swing right here, it's kind of hard to see, but these things, they just matter. I mean, this is what you're going to see on your footprint chart. As AJ was saying, is like there was a point in here. It was this point actually, and it's like if we get above that, look out, and you see buying pressure on the other side of that. It was in the footprint chart, right? This is what it looks like in Bookmap. That's when you're looking for your squeeze. Okay, and the NQ is really good for this, and I can't see too much of the other previous activity in here, but looking for the move back up to here, or maybe in here, 17,000. You've got the figure here. You've also got your high volume node here. Take some off, not knowing what's going to happen at that point, but looking for that snap back. And if I would start to look for a few things in here. If you get more buying compared to this selling here, you've got something probably pretty strong at that point. Not only will it trade back up to here, you'll probably get the move further. And then you can really get some momentum back up above this area here, and you can see it right here, very, very clearly here in this area. So good stuff. It sounds like, or looks like you're starting to hone your strategy and looking at something very specific. So Alan, let's open the mic for you. And guys, we only have we don't have too much time, so we'll keep it at I don't know, 3 or 4 minutes, Alan.
Do you hear me?
Yes, there you are.
Yeah, so I'll said like these trades, these happen like all day long. Like you've seen like this morning actually there was like 3 or 4 sweeps and sell sweeps like I was up and then in a split second you're down and then it just goes right back. Usually right through usually goes right back to the point where the selling started.
Yeah.
And like usually they wipe out all the sellers, everything gets wiped out, and then it has no choice but to go up because there's no one left underneath to do any selling. So that's why you have to wait like till it really gets to the bottom, because if you do it like too early, even if you wait for the V, you don't have to, like, to all of you, to everyone, like everyone wants to be like perfect and precise and not like lose like $1 and then try the perfect way. There is no perfect way. If you like, I know I covered it up in the middle where it's just trap bears where the V starts, but like, yeah, you would make more if you start at the total bottom, but you want a little more confidence, a little more for the trade on. So I covered the green bubble like Bruce was talking about. But yeah, so those are like the sellers that, I mean, the smart ones have the it's not a death sentence if you're in a long and this, as long as you have stop, at least stop you out and you keep some of your profit. But then you get to go back in reverse. Like it's like as soon as you see like 2 or 3 nice sized green bubbles, that's it. It 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 triggers the short squeeze, and then you get like gives you fuel to the fire to go up. And like if you could just like just look at this, look for this trade, like the state, like if you stay out of the market and just wait for sweeps or stop runs, you'll just see it happen over and over and over again. I saw it happen maybe like 10 times today. Just same, this picture here is a stop run, but today there were like there were so many sweeps. I remember there were so many sweeps, and they actually gave they if I found the sweep to actually give you like a little bit of a stronger move back up, because they kind of come down with such fierce ferocity. It's just amazes me, So like they say, just learn 1 or 2 trades and just master it. Like this is something I try and keep my postings kind of like in layman's terms, so like people can just see the basics. If you like look like where look if you, I don't remember ever seeing like icebergs execute at 50 50 50. I was already smelling something, but usually I prefer to go and wait for the well, I usually prefer to wait for the sweep to come down, because it's kind of hard to short on the top of a range, because you don't know if I might go a little bit higher or whatever. But like when you get to the bottom and there's nothing underneath, that's it. Where's it gonna go? It has to go back up. So you just you just look, I thought those icebergs, since they were even numbers, were all hedges. But whether they are hedges or not hedges, they still were at least 200 contracts sold. Right? We don't know the true number. That's why is this one have time and sales on it? I don't know. That's why I added time and sales. Yeah, yeah. I added it on the right. Look, you see 60. You see that 60. That's really like stuck up. And like 100. You see like the lots and the huge lots, the biggest, the 60 and the 100 and 40s and 40s, and that's it. What's the biggest red? A 10. That's it. Like it's like you're having a heavyweight, heavyweight boxer fighting a lightweight. Like you can't
Right.
you just
It,
see what's
it,
in front of you. Yeah,
this is what I love it. You're finding something that resonates with you. You're homing in on it, and looking into some of the details here, and you got something, and just get better and better at it.
yes. I owe it all to you, to everyone.
Not me, not me, but
Yeah.
uh,
I know
uh,
Bruce is very modest there.
yeah, great stuff, Alan. I'm really happy to see you on a
And, and,
road
and, and
here.
I want to tell people, like, and this is what you told us back we used to have those 9:30 a.m. Beginner webinars and stuff. And we always remember that there was a time that the ES was like really crappy and wasn't moving, and you said the Nasdaq was easier.
Yeah,
And I know that since Tom shows ES, and you show ES, and everyone looks at ES, but there's no reason to be scared of the Nasdaq, because, like you said, it has follow through, and you can like just pick up a quicker move. Like the less time you're in the market, the better. You just get that quick move and get out. With ES, a lot of times it rotates. So if anyone's having like trouble trading, like, or whatever, I would like tell them try the MNQ on the micros. You can do some damage with the micros, and see how different it is from the ES. You might like it better. Like that bit. You told me when you explained it to me, it changed it, because ES just all those rotations and hedging, and it's used in so many things. Like
Yeah.
But that's my little
Yeah,
tidbit of insight.
absolutely. In fact, I want to make a shout out to Crash F16 on this. So that's exactly what he's doing. He has found this market working really well for him, and he's not only looking at sweeps and stops. He's got the Market Pulse tool. He's getting extreme readings on Market Pulse, and then
Yeah.
it's this coincides exactly with what you're saying. And then looking for the momentum on the other side to start driving.
Right.
And now, furthermore, I mean, someone like Crash has, he's kind of wrapped a trade management around that. He starts to see that, but now it's dangerous. But you know, down at the
What's
at
dangerous?
the to buy at these low levels after sweeps and everything. But
Yeah,
um,
but that's why you wait. That's why I said I wait till you
yeah,
see some nice.
yeah. I,
Well,
I, I
one,
agree.
one, yeah.
The thing though, like about buying
I shouldn't
this,
have covered it.
no, let me just make this point. I mean, it's important because with Crash, for example, um, he has his reasons though. He has several confluencies he's looking for. Those have to align. If they don't, he will not. He will pass on it. It has to be, there has to be that for it to offer him something, because like you said, this market moves and it will always do this. Well, at least it has always done this. Uh, and we look for something that is more likely. Um, and
All right.
anyway, you guys are kind of like you know, doing the same thing, but a little bit differently. Maybe you're looking for a little more confirmation, which is really nice, Alan. I like it.
Yeah.
So
Yeah,
compliments.
and I wanted to say to everyone that you have to find the instrument that fits your personality. Like you could trade bonds. You know, if you're someone who likes less moving, you trade ZN or ZB. If you know, if you like faster moving, you do RTY this. Like, I think a big problem is not a problem. I don't know how to word it, Bruce, but like everyone just sees ES and they don't realize there's a whole world of futures out there that they can trade that might suit their personality better than ES's decision. You know what I'm trying to say?
Yeah, absolutely. No, in fact, Scott Pulcini and also the Algo Boys, Gene, have said the same thing for a long time. Why is everyone trading the ES? Like, there
Yeah,
are so many other markets to trade that might work better for you. So something to
exactly.
consider.
Yeah,
Um, so
yeah.
let's move on, Alan. Thank you. And
Thank you, Bruce.
I've got just one more, and it's really not much on slowdown. Oh, good Lord, did I not put it in here? No, I did put it in here. Never mind. Okay, here. Just here, I can get rid of that. Sorry. Um, okay, it's just an image, and I just wanted to make a comment in here about this and just hit it home again. This kind of clarity and reversal. Like he's kind of preempting me here a little bit. The next pattern we're going to go over in uh, the Bookmap Learning Center from the education button here at bookmap.com. You know, we've only got right now continuation and momentum type of strategy. And that's this flag pattern, and just, you know, understanding those momentum, because this is one of the easier ones, and bang for your buck is pretty incredible on these momentum strategies and continuation patterns. That's why we covered it and have let this kind of sink in. Reversals here are a lot more challenging, but you see the same types of things in here. And on the way down, high liquidity getting filled, getting filled, getting filled. And then we start to look at the structure in here. It was broken with a high volume here on the buy side, okay, but it's still rotating. And sellers come in, start to drive it lower into what? A lot of buyers down here fail to get through all of them. And we see the move back in. Now we're getting a higher low. And we're starting to make a little higher high. We're really watching this little area in here very, very closely. for the continuation move or the move away from this area in here. So now we don't know. It might do another rotation. That's how you get a head and shoulders pattern. Here's the shoulder over here. We got one push down. Maybe there's enough selling. And this is something to understand in terms of rotations. This is why Wyckoff, for example, calls it distribution and accumulation. They're battling in here. We don't know who the victor is quite yet. Now we can look at the order flow. We can look at the transactions in the market structure to gain insight, and that's where we're really looking for something to help us, starting to understand the reversal in here, like this high liquidity in here. Well, what if it bumped up here? What if you found big green dots up in here? Now that's something completely different. That's telling us something, right? Big green dots up in here, high liquidity up underneath in here after this move down. You can see, I just wanted to comment on this. You can see the progression here. Slow down. He's got his checklist and he's got this image. And this kind of stuff in here, burn it into your memory. You should know what your setups look like. You should be experts in them. Like for Alan, I would suggest go back and what are these things? Make a diagram, a schematic of it, maybe that's helpful for you to help clarify. Put that on, print it out, paste it on your wall. This is what you're looking for, right? And there's going to be lots of variations of that as well. Anyway, guys, slow down. I don't know. That's what my kind of commentary on this was. But do you have anything you wanted to add or comment on?
No, I think it's everything you said makes total sense. I will say that I think my personal progression as a trader and my ability to read in real time really kind of took a step when I started drawing my own schematic and putting a checklist on it and kind of like putting it upon myself to really go through what I consider a pattern to be. And so, I put a lot more time into making those images and checklists than I do the actual screenshot. So a lot of my work is done on the back end. And then when it comes time to post my screenshots, most of my communication has kind of been done. And I found that just by going through that process of making them, it's really burned into my head what I'm currently looking for and given me a lot more confidence to actually trade it. And then when I start slapping the images I've made on top of the screenshots, I can also notice flaws, like where did this break the structure I was looking for, kind of the pros and cons. We actually ended up having that exact same pattern that you have on your screen about 45 minutes later in the ES today. I added a screenshot to the chat, but it basically repeats itself 45 minutes later, and that ended up being the big reversal of the day. So it's not about being right or wrong. So my read and tracking of a potential, I was totally comfortable with and satisfied. And then when it happened again, a few minutes later, I was able to act on it. So I ended up having a really good afternoon being able to recognize that structure. And whether I trade it or not is one thing, but it definitely means I'm not getting short again when I start seeing that behavior. Whether I want to take it long, is a different story. But at this point, it's been making those diagrams, spending the time on them, creating those checklists has been the quickest, way to really improve my personal performance. I recommend everybody who's interested in doing something like that does it. And, if nothing else, it'll force you to learn the behavior that you're looking for.
Yeah, great stuff. I'm going to leave it at that, give you the last word. Guys, thank you very much for all the great content. Thank you, Slowdown, Jack, for all of the great coaching. So we'll see you next time, guys. And try to get to all your images. There's a lot to do here. But anyway, really appreciate it. And thanks, Slowdown, for being on the mic with us today.
Thank you, Bruce.
Bye-bye.